I was wrong. Interest rates have gone up way faster than I thought they would, which I think is just a testament to how strong the market really is/was. They're not raising interest rates to a certain point or a certain number. They're raising interest rates until the market slows down, which hasn't happened yet. That being said, you can still make a lot of money, and I am making a lot of money right now still investing in cash flowing rental properties. So in this video, I'm going to give you the 4 things that I am doing right now to continue to invest, to continue to build wealth, and continue to create financial freedom buying rental properties that cash flow. Number 1, follow the market. And by market, I mean rental rate market. I think it's important to not only look at interest rates increasing, but also look at rental rates increasing. It costs you more money to do a loan on a house now. There's no denying that. However, rental rates have gone up even more. I recently did some simple math on a $250,000 loan at 4.5%, which is what I could get last year. It cost me X. Doing the exact same $250,000 loan at 6.25%, which is what I got quoted recently from a small local bank, cost me $260 more a month, which is crazy. That's usually about how much I cash flow per door. So on the surface, you'd say, well, I'm gonna go from cash flowing $250 to cash flowing -10. However, I looked at the recent market rental rates and they've gone up even more. They've in fact gone up $324 per month if you look at the national average. So I'm not going to be getting market rate on every single property. I'm not going to be getting market rate on properties that I already have rented that I'm refinancing. I understand all that. But in general, I just want to point out that rental rates have gone up as much or more than interest rates have gone up per month if you look at both sides of it. It's kind of like being a business owner. You know, you go to the grocery store, groceries cost more. You go to get a car, cars cost more. However, the manufacturers and the sellers of both of those items, they're not losing money. They're just passing on the additional expense to the consumer. And in this case, you're a business owner owning a rental property. You're passing on the additional cost to the actual end user, which is the renter in this case. Now, I do want to point out that I do not always charge actual rates that the market charge. I like to give my guys and my gals a little bit of a deal as far as the rent goes. However, even charging 90% of the actual market rate, which I like to do, I'm still able to cash flow. So you just don't have to look at the glass as being half empty every time. Look at the other side, look at it being half full, and you can see that you can still cash flow. While we're talking about interest rates, I want to talk about the second recession-proof strategy that I'm using currently. Interest rates range from bank to bank. Last week, I called 3 separate banks to get quotes on refinances on the BRRRR method, and I got quoted everything from 6.25 to 7.25%. I tell you all the time, these small local banks are the secret. They're the key to success. They're the key to creating massive wealth and building relationships with. However, they can be flexible in the rates that they offer. A lot of local banks that I talked to recently got super aggressive when the rates were lower. So now they just can't get as aggressive because they need to make their spread. So they're just not being flexible. However, there are some small local banks out there that weren't as aggressive recently that now are trying to get more aggressive and win over the business from the other small local banks that were charging less than they were over the past few years. Just know that different local banks can charge different interest rates. A lot of people think that an interest rate is a set thing. They're not. The small local banks especially have flexibility to cut it a little bit or raise it a little bit depending on the borrower and depending on how much they want to win your business. So like everything else in life, make sure you're shopping around to different small local banks to try to get the best rates possible for you. Obviously look at amortization schedules, look at your relationship, look at a lot of different factors, but if you're looking for lowest interest rates possible, make sure to go to multiple different banks. You might be surprised at a rate that a bank will give you that will allow you to cash flow. Number 3 is pretty simple. It's just buy the property deeper. The competition has gone away a lot over the past 6 to 12 months. We're seeing it. We're able to get better deals on properties we're buying. So naturally, if you get a property cheaper, even if your interest rate's a little bit higher, they should offset each other because you're not asking to borrow as much because you bought it for less. So just make sure you're shopping around for different people to bring you deals and make sure you're offering numbers that are maybe a little more conservative than you have had been offering before. Maybe you don't get as many deals, but that's okay. As long as you're getting the right deals that will allow you to cash flow, you're gonna go ahead and continue to build that wealth. Every single property that I buy, I count on making a couple $100,000 over the next 10 to 15 years. So I'm not worried about a few $1,000s here or there. As long as I'm adding that asset to my portfolio, I'm continuing to get the benefits of real estate, which is over time, properties go up in value, they always do. The tenant pays the mortgage down, you get cash flow, and you get tax benefits all built into that one property. So make sure to buy deeper. You will be happy that you did. Number 4, and the most important by far, is get your mindset right. Understand that when you're buying rental properties, it's a long-term game. This is not a short-term game. You're not gonna get rich quick. Buying rental properties is not a get rich quick scheme. However, it is a get wealthy for sure plan, as long as you stick to the fundamentals and have some discipline. Just know that you're not gonna get rich overnight, and that maybe you're only gonna cash flow $100 a door over the next 1 to 2 years. But guess what? Because real estate always goes up. If you go look back from 1900 on, real estate doubles in value at least every 15 years. So even if you bought a property in 2006 at the last height, it doubled in value now since then. Real estate always will go up. It may go down a little bit or soften a little bit in the interim, but overall it's one of those investments that's always going to go up and will never ever go to zero. Very few investments can say that. So just have the long-term mindset that this is gonna take some time. When I'm talking about time, I'm talking about 5, maybe 10 years to build a lot of substantial wealth. Most people are okay with working for somebody else for 45 to 50 years to not even really create wealth, just to kind of live life, get by, and retire when they're too old to actually enjoy it. So just have the mindset that you can get there. You'll get there way sooner than having a W-2 job. You get there way sooner than working for somebody else. It's still going to take a few years, and there will be some bumps along the road. So just keep persevering, keep pushing through. There's no failed real estate investor except the real estate investors that quit. Put on your long-term mindset hat, and you will be happy that you're continuing to invest in real estate even during this tumultuous time, which I don't know if I said that word right, but you know what I mean. 90% of millionaires are created through real estate, no matter when you actually invest in real estate in history. So just think about that stat. That means any other type of investing, anything else you can think of, literally close your eyes and think of any type of investing, that plus every other type of investing makes up 10% of millionaires. 90% are created through real estate because it is such a solid investment. And right now, I feel like I'm buying things at a discount. When you go look at a car, if they say you can get 10% off, you're gonna be excited and you're gonna go buy that car. If you see a buy one, get one on your favorite pair of Jordans, you're gonna be excited because you're gonna buy one, get one free or get one half off. Have that same mindset right now, because these prices that you're able to get on real estate are low. They're going to go up over time. They may dip a little bit more after you buy them. You may buy something that's worth $200,000 now, next year it may be worth $185,000. But guess what? In 15 years, it's gonna be worth $400,000, and you're not gonna be worried about that short-term dip. Have that long-term mindset I talked about. Know that real estate is the way to create wealth quickly. There's no other way to do it that's legal that I can think of, unless you're gonna get lucky and win the lottery. But just stick with real estate, stick to the fundamentals, make sure you're following this channel, Sam FasterFreedom, and all my other platforms, the same handle. Make sure you're following me. I'm gonna teach you as much as I can for free on here, and check out the description below for some more opportunities for me to teach you. See you on the next one. Subscribe.
Whew, you were stretching.